What's going on, guys? Vinny here, back with another video. In this video, guys, I want to talk to you about making trading simple. And the reason why I want to discuss this topic is because when I first started trading, guys, there were so many different strategies on how to trade the market. All right. And the one thing about all of these strategies work. Right? You have Elliott waves, you have harmonic patterns, you have smart money concepts, you have the wick off trading strategy, and so many more strategies. Break and retest. I mean, it's just so many different strategies. And the problem with that is that you can go down a rabbit hole trying to find the best strategy. Okay. Today, guys, I'm going to teach you what the best strategy is. The best strategy is to trade the strategy that helps you understand the market so you're able to become profitable. So what I mean by that is whatever concept or strategy you agree with, or it's easy for you to understand and you're able to be profitable with that strategy, that's a strategy that you want to trade. All right. And that's the strategy you want to stick with. So as a new trader, you're going to go down a rabbit hole trying to find new strategies to trade. But there's really only two ways to trade the market. All right. So I'm going to make trading simple for you today. Okay. There's only two ways to trade the market, guys. Either you're trading with the impulse, you're trading the correction, you're trading the impulse, you're trading the correction, you're trading the impulse, or you're trading the correction. All right. So either you're trading with the trend or you're trading the pullback. You're trading with the trend or you're trading the pullback. Those are the only two ways to trade the market. If the market is moving like this, right, in a range or moving sideways, you want to stay away from this. Okay, you want to stay away when the market is moving sideways or moving in a range. Why trade that? What are you trying to prove to yourself? That you can be right? For what? When it comes to trading, we're trying to make money. We're not trying to impress anybody. You should care less trying to impress anybody with being right. Who cares if you're right or not? Right? You want to make money. You want to get in and get out the market. Find your setup and get out the market. So if the market's moving sideways like that, don't trade it. All right. Now, when it comes to the market moving sideways, there's always a time frame where the market is trending. You just had to find the time frame that the market's trending and trade with that time frame. So if the higher time frames is trending and the lower time frames is moving sideways, wait until the lower time frame starts trending like the higher time frames, and vice versa. If the higher time frames are moving sideways, go down to the lower time frames and trade the trending markets. Okay. So how do we make trading simple? Step one to understanding trading is you want to know your direction. Okay. So how do we know our direction? Well, there's a couple ways to know the direction. Right? We can use market structure. In this structure right here, price is making higher highs and higher lows. We have a low, a high, higher low, higher high, higher low, higher high. So when we see this type of structure, we can see that market is trending in an uptrend. All right. If it was going the other way, we will see a high, we'll see a low, a lower high, lower low, lower high, lower low. Okay. So the market's moving in a downtrend in this instance. Another way you can determine market structure is by using trend lines. All right. Trend line will tell you that the market is moving in the upward direction or downward direction. So that's the first step. You have to find the direction on the higher time frame. All right. The next thing that you want to do, all right, step two. All right. You want to find the most recent breaker structure. So if you do your analysis like I do on a daily time frame, we want to find the most recent breaker structure. So let me give you guys an example here. Let me pull this back up here. Okay. All right. So if we're looking at this example right here, the most recent breaker structure would be right here. All right. So price came up, pulled back, came up and broke structure. So price went above this high and created a higher high. After a break of structure, there's always going to be a pullback. It is guaranteed to happen in the market that price is going to pull back. So after a break of structure, there's always going to be a pullback. All right. So if you're on a higher time frame, like the daily time frame, like I trade, then you can trade the pullback. Or if you want to, you can simply wait for the pullback to be done. All right. So normally what I'll do is when I see the most recent break of structure, I'll draw what we call trading ranges. A trading range is simply the swing high and swing low, the price action between the swing high and swing low, the price action between the swing high and swing low. So that would be our swing low, and this would be our swing high. Okay. Now, the next thing I want to do is I want to grab my Fibonacci tool. Fibonacci tool is just a tool that measures the pullback. So we're going to go from our swing low to our swing high. And what I'm looking for is just the 50% area here. Okay. And I'm going to draw a line at that 50% spot. Now we can get rid of the Fibonacci tool. Okay. Now that I know where the 50% line is, anywhere below the 50% line and when the market's in an uptrend is the area where I'm going to look to buy whatever pair I'm trading, okay, to go in the direction of the trend. So that means I'm only looking to buy this pair when it enters into this buy zone. This will be considered my buy zone. Okay. So price normally pulls back to the area of break of structure. So we can expect price to do this. Come down to the break of structure, and we can expect price to go up to break this high, to continue going up with the trend. All right. So now that I have the trading ranges, I can expect price to pull back here. So what I can do, since I'm on a higher time frame, I can trade the pullback. All right. So the steps that you want to take, you want to find direction, you want to draw your trading ranges so you know where you are in the market and in which direction you should be trading. Again, as I said in the beginning, there's only two ways to trade. Either you're trading with the impulse or you're trading the correction. So that means you're either trading with the trend or you're trading the pullback. On the higher time frame, like a daily time frame, you can trade the pullback and you can trade with the trend. Okay. So in this example here, I would trade the correction. All right. And when price got into my area, I will be looking to buy and trade and continue with the trend. So all you have to do, guys, is this. In order to find trades, find the trend on the higher time frame. The next thing you want to do is wait for price to get to an area of supply or demand or support and resistance. And then when price is at a supply or demand, so this will be considered a supply area on the higher time frame. See, price got up to this area. Now we know that price is going to do a correction or pullback. So when price got up to this area here, all I would simply do is go down to a lower time frame, an entry time frame, like the 15-minute time frame, and wait for a break of structure. Okay, so a break of structure will be an example that I showed you earlier. Okay, so we're looking for a bearish break of structure. So we're looking for price to come up, create a high, right? Create that low, pull back, and this is where I'm looking to get in at on the market on the 15-minute time frame break of structure. Right here on that pullback. Okay, and then I'll be looking to take price down to continue with the trend. All right, so that's what I will be looking for. This example right here on the 15-minute time frame at this area of supply. All right, to go with the correction. It's just that simple, guys. It's just not hard at all. Again, you want to make trading simple and easy to understand. There's 3 steps. Find your trend, your direction, draw your trading ranges, wait for price to get to a higher time frame, supply or demand, or support and resistance, and then go down to your entry time frame, which can be the 15-minute time frame, and trade in the direction. You're either trading the impulse or you're trading the correction. It's just that simple. Right, so let me give you a real life example and show you how I made trading easy by creating an indicator that I only use for confirmation. Okay, this indicator is highly accurate. It's one of the best indicators out there right now. This indicator is very accurate. So if we go down to NZD USD, you see that we're on a daily time frame. Okay, so what I want to do is mark up my charts. So I'm going to draw my trading ranges. I see that the direction, the overall trend is that we're moving in a downtrend, okay, according to market structure. And if I took a trend line like this, you can see that we're moving down. Simple as that. So I know that I want to be trading, I'm looking for sell trades. So how I draw my trading ranges is from the swing low to the swing high. So the most recent break of structure that I see is right here. Okay, it's the most recent break of structure. Okay, according to the overall trend. All right, I'm not looking for this current price action. I'm looking according to the overall trend. It's also a break of structure here, but right here, price came down, created a lower high, then created a low. So this will be the most recent swing high to swing low. So I want to draw my trading range from this swing high to this swing low. All right. Next step is, since we're moving in a downtrend, I want to take the Fibonacci tool, which is this measures the pullback. You want to go from the swing high to the swing low. All right. Next, I want to mark up the 50% area, which is right here. Okay, now we can get rid of the Fibonacci tool. Delete. All right, so this will be considered my sell zone. Okay, a price entered into this area, then I'll be looking to sell the market. Okay, I'm looking to sell. So since price is still going up, we had some rejection in this area already. Here. Looks like price is going back up to retest this area, and then we'll see if we go down to a lower time frame. So now we need to go down to the 4-hour time frame, and we'll get a little more information. Okay, so on the on the 4-hour time frame, we can see that price had a strong bearish candle. This looks like it's pulling back to retest this high. Okay, it's like it's pulling back to retest this high. So the next thing I want to do is, if I want to get in on this sale, I want to go down to our entry time frame, which is a 15-minute time frame. And again, you remember the structure I was telling you I was looking for, right? I'm looking for this structure right here on the 15-minute time frame. Price goes up, creates a high, breaks, comes back up to retest this break of structure. Okay, so that's what I'm looking for on the 15-minute time frame. All right, so let me go ahead and get rid of this. So I do see that same break of structure right here. Right, so you guys can see that price went up, created a high, broke structure. Right, this low was broken. Price came back up here to retest this area, right? Cool. So now price is moving sideways. So what I want to do is just draw this out a little further.